Hey, good morning, everyone. It's Monday morning, and we're 30 minutes before the market opens. It looks like the market is going to open lower this morning. We've got the S&P down, the Nasdaq down, the Dow down. No big deal. I imagine some investors are cashing out some really good gains. It's been a really good market in 2025, one that's opened up opportunities for investors that were paying attention, doing their analysis and buying at the right time. And now the market might be giving up some of those gains, but we'll see. We'll see how extensive this sell-off is this week and maybe for the remainder of September leading into October. So this live stream is going to look at some stocks, and we've got a couple that look interesting this morning. And I'm going to handle the fundamental analysis of stocks, looking at their intrinsic value, seeing if it's a good time potentially to buy based on discounts and based on the pricing of stocks. And my colleague, Daryl, he comes in after or before, depending on who starts with a particular company. And he looks at the charts, looking at what are investors doing with that stock. Are they buying it up, selling it off? Is it a good or bad time based on the charts to consider a stock? So you get two different perspectives that I think would really help an investor evaluate a business, maybe either a business that you already own, maybe just keeping an eye on it, doing your due diligence on it, as well as maybe a stock that you're looking to buy, or maybe you'll get an idea out of this live stream of stocks that you should follow. So let me see how Daryl's doing. How you doing, Daryl, this morning?
Yeah, I'm doing pretty well this morning, Victor. Good to see you. Good morning, good afternoon, everyone.
Yeah, it's great to be with you. And I thought last week's streams, I really like how we're going about this. I think we're covering stocks. If anything, I'm not only on the stream as a participant, but when I listen to your analysis, I really do get a lot out of it. I'm hoping that people feel the way that I'm feeling, which is, hey, we're getting deep into these stocks and revealing if these stocks are a good investment at this time, or maybe, hey, not so good. But we'll get into it. We've already got a lot of comments coming in, which is great. We've got people joining the stream. Welcome, everybody. We got Blocks for Fun. He'd like to look at Disney, which is fine. Disney is continuing to get more interesting, by the way. I would say a year and a half ago, was like, can't touch it, but it's doing a lot better. So Disney's on the list. The other stocks that we want to look at this morning are Pfizer. They're going to acquire a company. They're going to acquire symbol MTSR. And then I had a member request that wanted to look at a couple small businesses, KALA, and then the other one is MBOT. So we've got four stocks on the docket that we're going to cover, starting with Disney, because we prioritize requests from members. If you're not a member, no big deal. You buy a $5 super chat and you can get your name on the list, get your stock on the list, I should say. David Knight, good morning. I like Catalyst, so I agree with you. Mike, good morning. You can be real busy today. All right. Well, good luck with your day. Good luck with your stocks. Thanks for attending. All right. So I won't do much of a overview on the market. I think we know where the market's at. I would like to begin with Disney. Let's start there. Disney is a stock that I think we all have been familiar with for a long time. Disney, of course, has their theme parks. They have different media properties, from linear TV, ABC, the channel, cable. They do their streaming service, which has been getting more streamers, which is good, and all those things. So in general, I think Disney has a lot of valuable assets, but it also has like legacy. What I mean by that is it has some businesses that are not that great anymore. So we will take a look at it fundamentally. And Stefan, very good to see you. Thanks for joining, and thanks for being a member. All right, so we got Disney there at $204 billion market cap. This year they are in the green, which is a turn in the right direction because they've had a couple rough years. You see in the 5 year that they really sold off in 2022. Everybody sold off, but these guys never recovered. They had a CEO that came into the picture, and it didn't quite go well for him. And they brought back the previous CEO who had retired, and he's gotten the ship back in order. Their revenue's 94 billion, PE ratio 17, forward P of 18. They pay a small dividend, and investors think it's a strong buy with a small discount. They are growing a little bit. It is encouraging to see them grow, but it's not real incredible growth. It's just, beating inflation just by a little bit, which is not exciting. The gross profit is not exciting also. And I think part of it is when you run a big theme park, you got to pay for all the operating costs of that park. You got to pay for all kinds of expenses. And that really adds up and it really keeps your gross margins limited. And therefore, your profit margins will also be limited. Your free cash flow would be limited. And that's been one of the things that has made Disney a less desirable communication services business to me. I'd rather own Google Alphabet, Meta, which have tremendously higher gross margins, net profit margins, and free cash flow margins. So that's been one of the limitations on Disney. Let's see what analysts are saying, and let's take a look at their balance sheet. So their analyst community, 21 of them are covering the stock. They think it's 14.7% discounted if you average their price targets. And we look at their forecast. They have a fiscal year that ends September 30th. So they're kind of working on finishing this year in the next week and a half. It's expected that they're going to keep growing, but they're going to grow at small rates, right? So again, not overly exciting. Their PE isn't overly expensive. So this is a very well-known company. The good news about, Disney is everybody knows Mickey Mouse. Everybody knows that they're a good business, and their movies tend to do really well. Their new production tends to be successful. They don't go out and create movies that are going to change the world, so to speak. They kind of latch on to a particular genre and just really stick to it. A lot of kids' movies. Movies tend to be a lot of sequels, which kind of get a little old if you're a fan, but Disney's into making money, not necessarily being the best artist out there. So the business, it's I would say relatively well known and priced reasonably. I'll give you my valuation in a minute. I first wanted to take a look at their balance sheet. Let's take a look at their balance sheet. And this is where, we start dealing with how much debt do they handle. And they have $42.26 billion of debt with $5.37 billion of cash. Debt to EBITDA is 2. So it's within that. It's a decent ratio. I don't want it to be above 3 debt to EBITDA. This kind of in a general sense, it would take them 2 years to really devote their earnings before interest, tax, depreciation, and amortization. If they devoted that and didn't spend money on like growth or anything, they could pay off their debt. Not a bad ratio, but it's not excellent either. It's kind of like if you're in school, it'd be like a B minus, maybe a C plus. You passed, but you weren't one of the top students. All right, so we got through just a fundamental review. Now let's take a peek at what I think the business is worth based on all that information put into a valuation model. And looks like my friends over at Google are not updating my calculations, or I should say my lookups. So I got to refresh my screen and do that all over again. And here we go. So I happen to think that Disney's 25% discounted. So I'm agreeing with the analyst. I'm actually at a higher discount than they are. And this is all based on their free cash flows and also their earnings per share. I'm giving them a P at 24, and they're growing. Very well known brand, very trusted brand. And I think the retail investor is beginning to get quite comfortable with Disney. And, at one time, I think Disney, geez, it must have been like 30, 40 years ago. It was one of the most valuable businesses in the exchange. So it really had great credibility then. I think it still has great credibility today. It's just not in the ideal business anymore. As mentioned, I'd rather have Meta, I'd rather have Google. But these guys, it looks like if an investor is interested in Disney, I think they offer a decent discount. And then last thing I'll say is as we consider, what's the economy going to do? Are we going to go into recession or not? And I think in recessions, people stop taking like vacations and so forth. And that could hurt Disney because um, I've taken my family to Disneyland. I'm sure you guys have as well. It's not cheap. It's a lot of fun. I'm glad I did it. But man, it really was an expensive trip to go to Disney World. I live in California. I could drive to Disneyland. We've had annual passes. And if things got tight, I imagine if I had a young family, one of the things I'd probably cut would be that annual pass or, hey, we're not going to go to Disney World this summer. We're not going to go next summer. Instead, we're going to go camping, save a few dollars, but have a good time as a family. So that's my fundamental review of Disney. Let me pass it over to Daryl, and he can take a look at the charts.
So excuse me. I'm looking at a 5-year daily price chart here, and I just drew this line across the top of these 3 peaks just to see where we have a line of resistance. It's hit that 3 times over the last, since September of 2022, and it keeps getting rejected there after surpassing that quite handily in 2021. But there were a lot of stocks that really ran up in 2021, probably beyond what they should have. So this looks like a respectable resistance line, and it looks like we're sitting about $10 below that. I'm going to just look at a year. We can see that it is trading above a 200, which is upward sloping after having been downward sloping for about a year. It's turned around now and is upward sloping. It's trading below a downward sloping 50-day and a downward sloping 20-day. In the last 2 weeks have looked like declining. Prices kind of be indicated by the RSI here, which is sitting at 38. I'd really like to have it hold right around 40. We can see that it dropped to 30 or so back in August. And I'm not even going to talk about the tariff because every company had that particular issue. But it'd be nice for it to hold right here around 40. But it is showing weakness on the RSI. It's also showing weakness on the PPO. It is in bearish territory, and it looks like it's accelerating into bearish territory because this divergence between these two moving averages is getting larger.
Mm-hmm.
So we might see continued weakness here for the next few days. Accumulation is sitting at a nice level. It had some distribution back from December pretty much all the way through May, and then a large amount of accumulation, and it's sitting at pretty much an all-time, not an all-time, 52-week high, 1-year high.
Mm-hmm.
So they are outperforming the S&P 500 by about 5%. They're underperforming the communication sector by about 10%. They're outperforming the broadcasting, not broadcasting, just entertainment industry by 9%, and that industry is underperforming the S&P 500 by 4%. To me, it looks like it's going to continue to trade sideways for a while, and there is a pretty significant point of resistance here around 123 to 124.
Excellent. So it's interesting that for the last 3 years, your charts are showing that resistance line on the upper end. That
Yep.
was really interesting. And yeah, so I mean, we're just sitting on a what I think is an expensive market, and Disney would not be the first stock I would think about. Um, you, right now I'm thinking, okay, I don't want to buy too much more at this point. I may want to sell some stocks. I'm actually selling a few stocks, and because I want to create a little more capital. If we have a substantial sell off, I'll be glad that I did so. But this one is I think I can't argue with an investor that said, "Hey, I like the Disney business. I want to hold it long term." That's a pretty good idea. That's a pretty good idea. I can't argue with it, but it's just not the first one I would make in this sector. I like Google. I think Google's has a lot of momentum. I think you could say that, hey, that's just gone up too much over the last 6 weeks. I agree with that, but it went up for a reason. There's tremendous value there, and it's got a strong grasp on the future. Google does. You look at the YouTube business; it's phenomenal, along with their other businesses. So, thanks for asking. Blocks are fun. That was a good one. It's good to. I always like talking about Disney. It's a good company. Feel good
Notice,
company.
notice the volume on Friday. So this was a triple witching day. So we had a
Triple Witching Day. Please explain what Triple Witching Day is.
so when we look at futures, we're looking at a contract typically in the next quarter. So the futures contract for the S&P expired on Friday,
Mm-hmm.
and then you have daily options expiring probably for Disney, and you also had weekly, and well, it could have been a quad witching day because you'd had weekly expirations expiring and monthly expiration
Got
options
it. Okay.
expiring. So when all of that happens, you'll notice just about in every quarter on that third week, you'll see way above average volume. And that was definitely the case here. And one other thing I'll point out is typically the 3 days following monthly options expiration is typically your weakest period of any given month.
Mm-hmm.
So we saw a downturn on Friday. This doesn't surprise me because it was at least triple witching, and it may have been quadruple witching day.
Thanks. Thanks. Were you going to say something else? I think I interrupted your thought
Nope.
there. All
Nope.
right, perfect. Thanks, Daryl. Good stuff. Good stuff. And let's uh let's turn our attention over to Pfizer. Pfizer created a little bit of news. They are going to acquire a company with the name of Metsera. And Metsera is a company that is in the weight loss industry. and they are in the clinical stage of their particular drug and their treatment for obesity. And Pfizer's known for this. They acquire businesses a little early. They like to acquire them when they're early in their whole development cycle. And the good news is that if this drug works or if this treatment works, they're going to have the patent for a long time. That's the good news. The risk is, what if the FDA says, yeah, we don't like the results, or the results are mixed, or the results are unsubstantiated, that you're actually going to help people with obesity. We think your treatment doesn't work. Then guess what? You just acquired a company that doesn't have much value. Looking at the actual timeline, this is off the Metsera website. They have they're in phase 2. They need to get through phase 3 successfully, and then be approved for commercialization. And of course, it'll be compared against Novo Nordisk's, that treatment, as well as Eli Lilly. And if it's better than those, look out. This thing's probably going to be worth a lot for Pfizer. If it's not as effective as those other companies, again, they acquired a business that doesn't have much value. Now, at this point, Metsera, on Friday, they were worth $3.5 billion. And they're pre-revenue. So this is without any revenue. This is what they were worth. Today, they're going to be worth about $8 billion. So really nice morning for any Metsera investors that are out there. If you're a Metsera investor, congratulations. You're probably going to have something nice for lunch today, or maybe dinner. You're going to be feeling a little wealthier. Is that a train bell, or is that because it's 9:22 anyway?
I was celebrating Metsera.
There we go.
Shareholders.
Yeah. All right. So we've got market cap 3.5 billion, and then analysts think it's still a strong buy with very tremendous upside. I'd love to see their forecast and see what they think is going to happen. Over the 1 year, the stock is up substantially. I guess investors are really buying into their science. Again, they don't have any revenue, so it's not very interesting at all to look at that. 5 analysts cover this stock. They all think it's gonna be worth it. But we're not going to see any revenue for the next couple of years. So Pfizer's buying this business. They're going to pay $8 billion or so. And it's just going to be an asset that doesn't produce any revenue, any cash flows, nothing for a couple of years. And again, the risk reward, if it works, and I'm sure Pfizer, they've got brilliant scientists. It's probably a giant, reference that a big pharmaceutical company that knows the science is buying this business. They probably think this is going to work. So it's probably going to work. We'll see how disruptive it is to Novo Nordisk, which leads me to wonder, what is happening with NVO? NVO is trading down, probably on the news that, hey, your competitor out there is trying to bring a drug to market in a few years that's going to compete against your most successful drug. Interesting.
What about Lilly?
And let's take a look at Lilly. And Lilly is down a little bit.
Not too much.
Okay. Not too much. So Metsera is definitely doing great. Now, Pfizer, their stock is also catching a small rally, and but it's kind of fading as I speak. Interesting. Now, I've been disappointed with Pfizer. I'm a stockholder of Pfizer, and you see the 1 year, you could see why I'm disappointed is it just hasn't gone anywhere. I think a good part of it is that they don't have a real good growth plan for the next 2 years. They got themselves through the COVID era. They did great during COVID because they had one of the vaccines, and they just generated so much darn profit and cash. But they find themselves with no growth, and that's pretty undesirable by the market. And this acquisition is interesting, but as mentioned, it's not going to help them grow, help Pfizer grow their revenue line for the next 2 years for sure. And maybe year three, it begins to click and it adds a little bit of revenue. And maybe in 4 years, you would see this stock really rally. So, not, I think it's potentially a good thing for Pfizer for its future, but it's not, in my mind, not affecting the stock a whole lot today, nor for the next couple of years. And Pfizer for me is actually, I've been disappointed with the stock, and I'm a stockholder. They pay a nice dividend, by the way, 7%, and they can afford it. They have lots of cash, and they're acquiring businesses out there. Any thoughts on the situation? Then we're gonna work on Hive for Jarl Van Eyck. So let you kind of comment on Pfizer and the acquisition, and then we'll focus on that super chat request.
Yeah, I had never even heard of this company. And I didn't even know this was in the works, but I guess it had been surfaced at least a couple of months ago. But we can see the after or pre-market trading after the announcement this morning. It's curious that this company, let me go back to a 1 year chart. They just IPO'd in January of this year and already getting picked
Acquired.
up.
Yeah.
And this was an IPO that, with the exception of the chaos around the tariffs, if we exclude that, this is one that didn't ever pull back very much. So I got to exclude all of this because that happened. I don't know if you guys can hear that storm. It is incredible outside this.
I heard that loud and clear, sir.
Yeah. All right. It is a big storm. So anyway, with the exception of this is an IPO that didn't fall out of bed too early. So anyway, let's take a look at Pfizer. Yeah, they've been pretty flat pretty much for the entire year, with the exception of the tariff turmoil. So this is one, if we look at my trades on it, I don't have a very good win rate, but I still managed to have a fairly good gain loss ratio, because the 5 trades that I have in a losing position have lost 732 spread over 5 trades, but I've made 768 on the 2 winning trades. So the gain loss ratio stays pretty high. And the only thing that helps me with this one is wow, this storm is insane.
I don't think Mother Nature likes Pfizer. That's what I'm beginning to realize.
I kind of wheel this one with options, so I'll sell puts when the price gets too low, and I'll sell calls when it gets too high. So that's contributed about 3.5%. So if I hadn't have done that, I'd be in the hole probably about that much, but that's kept me above into a profit on this one. But it has been, if I just owned it outright, it would be really disappointing. Okay.
Very interesting. So thanks for covering that. We're going to turn our attention over to Hive and Jarl Van Eyck. Thanks so much for your sponsorship of a super chat. And I was right in the middle of beginning to get acquainted with Hive. They are a data center company. I think they're Their history started in Bitcoin mining, and having grown their expertise around, operating their, a data center with a lot of GPUs, because the GPUs that are used to build large language models are also used for AI build outs to build large language models. And that's something that it looks like Hive is taking the opportunity to move to the AI, market of building large language models, offering their capacity to companies that want to build those technologies. Now, this is the same thing CoreWeave has done. CoreWeave had a history of doing Bitcoin mining, and then they moved successfully to the AI space. They changed their name so they'd be kind of recognized as more of a, hey, we're a data center company focused on AI. So that makes sense that, hey, their management's doing the right thing. Let's go where the opportunity is. When we look at the stock, it's really gone places, huh? Over the 1 year, 20%, but you see, had a pretty strong sell off. It peaked back in November 2024. It's going to be interesting to see these charts when Daryl gets a hold of them. And this year it's up 26%, not bad. Now, I kind of like that they're up nicely, but not like screaming up like 260%, because my immediate response to like stocks that go up that fast is, man, am I showing up really late to the party? Is it just going to fade after this? But at this point, the market is opened. This stock is down 6%. The market cap of this company, a small market cap. Great. Small caps have been performing so well for my portfolio for the last couple months. So I'm good with small caps. Revenue is 128 million. They are profitable. Look at this PE ratio, 11. That's really, really attractive. Analysts think it's a strong buy. All right. So let's take a closer look and see how their business has been moving. Now, I was taking a glance at their business, and keep in mind, they kind of had a switch over. Hey, previously they were a Bitcoin miner. They're moving to being a data center company with a focus around AI. And that switch over is not, it comes with a couple of, maybe a year where the financials look really weird. And so long as they successfully start their new identity, so to speak, I'll be good with it. So they had that year where they're like, oh man, we switched over, we stopped mining Bitcoin. So that revenue stream went away. And now they're beginning to really reap the reward of switching over. 41% growth in the most recent quarter after seeing their revenues really shrink when they stopped mining that Bitcoin. So that looks good. That looks good. The balance sheet's going to be really important for this business, but let's not jump ahead too much. They are profitable. They are not generating cash flow. Now that may be okay. And the reason I say that is if they're growing their business, they're buying GPUs, probably from NVIDIA, and buying all kinds of equipment to put in that data center because they've got a bunch of contracts with customers, and they're saying, hey, we're going to have all this revenue coming in. So we're having to spend a lot of capital on infrastructure. Totally understand that would be acceptable, but let's not jump ahead too much. I'm just trying to form a, hey, is that complete bad news or could it be okay? They have gross margins of 23%. I think that could improve. Back in the day, they were nice and high, but they've switched their business. Okay. And they do have some profitability. That means that's good. That's good. Okay. So the business is kind of in a trying to finish their change from one business to another. Now let's take a look at a couple of things. I'm going to look at the balance sheet first, just to see what kind of debt we're dealing with here. All right. So the debt, we're dealing with $40 million of debt. The balance sheet looks really good, much better than CoreWeave. I've been critical of CoreWeave because of their balance sheet. So cash is 58 million, and then debt is 40 million. That's very good. They probably had a lot of cash on the balance sheet from their crypto days, from having built a lot of, or mined a lot of Bitcoin. And they were sitting on probably a really nice treasury. And they were like, hey, let's move over to the AI business. Cool. We got all this Bitcoin. Let's sell it, use that capital and reinvent the company. Beautiful. I like the idea. This was going to be my biggest worry, was this line. Because if I show you CoreWeave, and we'll look at CoreWeave later, and I'll point out the things I don't like with CoreWeave. All right, now let's look at a forecast here. We have 6 analysts covering this tiny little business. And they all think, man, this is a really attractive idea. 80%. All right. Now, these guys are saying they already closed this year. Fiscal year 2025 finished March 31st. So we are already in fiscal year 2026. And man, look at this growth. 190%. Now, I'm waiting for that thunder. And if I don't hear thunder, that means the gods, the weather gods are okay with this company. And it looks okay. And next year at 41%. I mean, this is like really nice growth. Very good. Very good. Excellent. So I'm liking what I'm seeing. And their earnings per share is going to be 22 cents per share. It's going to grow 73% next year. So it looks good. So that looks terrific. Let me grab a few pieces of information. Actually, why don't I do this if you're ready for it, Daryl? Can you take a look at the charts on this stock, and then I'll start on the valuation.
Okay. So I drew a couple of trend lines just to get our eyes focused on this 5-year daily price chart. And
and let me interrupt you for just a second and just put out there, realize that they've had a change in go to market, right? They were a Bitcoin miner. Now they're going to be an AI business,
right?
And not at the front end, maybe toward the tail end of your review. If you can kind of reflect on that and say, how would you process that big, because that's a substantial change in the business. How would you process that? And then kind of look at the charts and say, okay, well, this is how I now interpret the charts, maybe at the tail end of your review.
Yeah. Okay. So what I see here is a series of lower highs as we've moved over the past 3 years. And I do see one line here where we connected 2 lows, keeping in mind that this was the tariff low. So this may not be necessarily fair. Maybe I could actually move that line up to, one of these other lows, excluding this one, to give us somewhat of a wedge that it's facing right now. But anyway, that's just kind of a long-term view. We do have a series of lower highs as we moved over the past 3 years. They are trading above their 20-day moving average, an upward sloping 20-day. They're trading above an upward sloping 50-day. And it looks like the 200-day may be leveling out and potentially starting to increase, but it looks like it may be on still of a down slope. That would mean an overall downtrend. They did get overbought over the last, since the 22nd of August. With this price run, they did move into overbought territory. It looks like today they're moving out of overbought with this 5.5% drop this morning. So the RSI is bullish. The PPO is bullish, but we're looking for probably a negative or bearish crossover in bullish territory here within the next day or so if this price action continues. It does have good momentum and relative strength compared to the S&P 500 on a daily view. It's been under distribution pretty much since November of last year on this chart, and it did reach down to a low point on the 1st of August, and then it looks like it's resumed, but starting to weaken here a little bit. Money flow has been positive, but that's also weakening at this particular point. So, going back to your question, that's to me is more of a fundamental question until I start seeing the charts reflecting how sentiment is changing based on that different strategy that this company is moving into from a Bitcoin miner to an AI player. I'd have to see what traders are doing and their sentiment. That's what the chart would tell me. There's no way I can at least with my experience with charts, to be able to predict any price points given that change in their business. That would really have to be a more of a fundamental exercise that we went through.
All right, perfect. So speaking of fundamentals, literally just hit the last key and got a valuation on Hive. So I think the business is discounted by 49%. That's what I would think it's discounted by. And keep in mind, I am discounting the business by 12%. And for maybe newer people that are valuing companies, when you buy a business, when you buy, let's say, a business that everybody knows about, and it's a lower risk, right? Let's think about Microsoft. Hey, we all know Microsoft. They're going to be around for a long time. Not a lot of risk. I might discount them by 7.5% to 8%. But when you take a bigger risk, which is the case with Hive, I increased it to 12%. The way of saying it is the higher the risk I'm taking, the greater return on my investment that I want, 12% being the discount rate. Because then my cash forecast, it's being discounted by 12%. And this is the cash forecast. Based on that 12% discount rate, I think the cash flows in the future are worth $1.1 billion. The business is currently at a market cap of $823 million. So there's a 27% discount. And earnings per share is even better. I'm giving them a nice 36 PE, because if you're going to grow nearly at 200%, I mean, yeah, you deserve a 36 for sure. And I'm even going with a moderate kind of growth rate based on what I saw from their forecast. So this is a quite attractive idea. I like this small cap. I like that they're in the data center. And I've got CoreWeave right above them. And CoreWeave, I think, is actually priced too high. Part of it is that they carry some debt, and that debt is a pretty big number. So it kind of takes away from the value of the cash that I think they're going to produce in the future. I decrement it by 14.5 billion. That brings it down quite a bit. I think they're going to grow really well, but I think CoreWeave is, I think, using a lot of the positive stories around AI, and I don't blame them. I mean, they switched over from being a Bitcoin miner over to being an AI company. Good for them. But I think Hive actually looks far better in my eyes. Now, keep in mind, this is a terrific small cap idea. It's risky, high risk, but there could be some pretty good reward as well. When you talk about data center, you're talking about businesses Like the big dogs in this industry are going to be Amazon with AWS, Microsoft with their Azure cloud, and Google Cloud. And you better believe that those businesses provide an equivalent infrastructure service as Hive or even CoreWeave. Now, Hive and CoreWeave probably can price their services more affordably because they're small. They're like, hey, you're not paying for the overhead that Amazon, Microsoft, or Google have, and we can get to market quicker with you. We can make you. It's usually analogy is Hive would go to a small business and say, you're going to be a big fish in our pond. Whereas if you go to AWS, you're going to be you're going to be like plankton size creature inside of the vast ocean that is AWS. And to some businesses, it makes a lot of sense to partner with Hive. If you're a startup, you're like, hey, we're going to go with an organization that's smaller, that I know the CEO. The CEO and I talk once a month and we talk about what I'm doing with my business and how they're going to help me be the best AI business there is out there. So I like the idea. Just be aware this is a high risk one. The value is there. The idea is a good one. The stock, I think, was selling off today. So wow. Look at that. I didn't hear thunder in Daryl's background, but the gods are communicating to us through the stock price here. But all kidding aside, today's a down day. And these small caps, right? When we have pullbacks and sell-offs, the small caps take the brunt of it first because investors want to move from perceived high risk to lower risk. And smaller caps are riskier, especially smaller caps that are in the AI space like this. So it is a good one. I'm glad you brought it up. And I wouldn't have looked at Hive unless you had brought it up. So I appreciate that. Good one. Thank you, sir. I appreciate the sponsorship on the Super Chat. Consider being a member. I think it'd be good to see you often, and you can nominate stocks on live streams and be part of your membership. But I really thank you for joining and for the Super Chat. All right. So Ben 10, good to see you. You sold Pfizer years ago. Interesting. What's the market doing right now? Well, we're still down. The Dow is down quite a bit. NASDAQ's not bad. Okay, looks good. Let me catch up on comments here. Shadow Guy. Hopefully you're having a good day. Mike, appreciate the positive comment. Hopefully your day is going well. For Algorithm, good to see you. We're going to talk a little Chewy. So Ben 10 wants to look at Chewy. Glad to. Let's take
He
a look
actually said to disregard that, so it's up to you if you want to cover it.
Oh, okay. All right. Well, I'm glad somebody's reading the comments. All right. No problem. All right. So, all right. So we're caught up there. We covered Pfizer. We covered Hive, which was really interesting. Now, there's a couple of small caps that a member wanted me to cover. Let's start with Mbot. And these are, I've never looked at these stocks. So we're going to look at these together. Mbot is Microbot Medical Inc. And these guys do medical device company that focuses on transforming endovascular procedures through advanced robotic technology. The company offers Liberty, an endovascular robotic surgical system, which allows physicians to conduct a catheter-based procedure from outside the catheterization laboratory. Very cool. Wow. Incredible what they're doing in medicine. You know, the intrusiveness of like even heart surgeries. If you had heart surgery 50 years ago, it's like, geez, it was pretty invasive. Now they're like, geez, they go through one of your limbs somewhere, they get to your heart, they fix everything, and you're good to go. Okay, so these guys are in Massachusetts. All right. This is their equipment. All right, so I get it. This is a science and a technology. This is a biotech company, right? This is pretty advanced. Over the year to date, this stock is going up. Oh man, 182%, 241 over the 1 year, but it's down 58. See how stocks will IPO and fade, and then once they prove that, hey, we're a real good business, then the stock rallies. This one's just been killing it. 166 million, super small cap. So this is a super small cap, 166 million in market cap. So they don't have any revenue yet. So I guess they're getting close to going to, so they don't have any revenue. This is pre-revenue, and they're getting close to being in the commercial stage of their product. Let's see if we have analysts putting a forecast out there. We have 3 analysts, and they're forecasting that they're going to begin to sell this product in this year and a little more next year. So they're going into the commercial stage of their product. So this looks interesting. That's why the stock's just really gone places. Now, this is a tiny company with a very interesting future. I would rate this a watch stock, but not one that I can do a valuation on. I don't have revenues to work with. I don't have an earnings per share, and it would be a very good stock to watch. But that's as far as I could go on my end. Any comments on Microbot Medical?
Yeah, I'm trying to figure out when they actually started. It was founded in 2010. Okay. Because I'm looking at their chart. I'm going back to 2001, and it looks like they had a stock trading. So they said they were created in 2010. I don't understand what's going on. I'm looking at weekly data and going back 25 years, and it looks like they were trading it. Those numbers almost seem unbelievable. $63,000 a share. So I don't know. I'm pretty confused at what
unusual.
I'm pretty confused at what I'm seeing here. But if that's the case, they've definitely had some issues along the way. They've had 1, 2, 3, 4 reverse splits. We usually see companies doing that to keep their stock price up. So let's pull back to just 1 year. And since the beginning of this year, they've been on a pretty nice run, actually. They are trading above a 200-day. The 50-day is rolling over, and it looks like they're slightly below that 50-day. They're trading at 315, and the 50-day moving average is at 319, and it is decreasing, and the 20-day is rolled over. So it looks like the momentum is to the downside at the moment. They do have an RSI sitting at 45. PPO was positive since the 23rd of July. Did have a negative crossover on 11th of September, maybe the 9th of September, and has moved into negative territory. The money flow is positive, but it looks like it spends a lot of time with negative money flow, and that would be confirmed by the prices that we've seen. really, I'd like to investigate, why I'm seeing price data all the way back to 2001, but they were created in 2010, or established in 2010. So anyway, I need a little bit more research on this one, but the chart isn't looking too bad. It's definitely on an upward rising. I'm sure the stock is pretty risky overall, but looks like it's moving up at the moment.
Yeah, really interesting business. And I mean, the science has been proven. All the robots and so forth they use for surgeries, it's totally a science that's been proven. All right, moving on. So it looks like Peter joined the stream. And Peter, I put FI on the list, and we'll cover that after I cover KALA. KLAA. So Kala Bio. So we're staying in the bio area. A clinical stage biopharmaceutical company engages in the research and development, commercialization of therapies for rare and severe eye diseases. The company led product candidate include KPI 012, which is a phase 2 clinical trial for treatment of persistent corneal epithelial defects in limbal stem cell deficiency. Okay, and this is a small business. Let's take a peek at their website. Okay. So they're clinical stage. So I think they're going to be pre-revenue. And these businesses, the one thing, as an investor, this is potentially a very fertile space for investors that really know the sciences. I don't. So I have to be careful not to go too far. Like that robotic company we just looked at, looked really interesting to me. But maybe somebody that's really deep in the sciences could say, hey, that's going to work or it's not going to work. That's a good idea or that's a bad idea. And if you do have the knowledge in this space, you have an advantage. You really know what's real and what's not real. The informed, investor like myself, I can go so far, but then that's it. So I have to be careful not to go too deep into some of these startups that are pre-revenue because I don't have the background to say, hey, that science is going to work. Investors are really buying into this stock 170%. So these stocks are flourishing and these stocks are very small. So it doesn't take a lot to make these stocks move. And this one has certainly moved. The market cap's up to 129 million. They're losing money because they just don't create any revenues yet. So there's no opportunity to make money. Let's jump right into the forecast and see 3 analysts are covering this stock. And these analysts are really believing in this business. They think it's 76% discounted. Let's see when the revenues are supposed to come into the picture. The revenues are 3 years away. And okay, so that's not an eternity, but that's a while. And they're in the clinical stage, meaning they still have to get through FDA process and there could be disruption to that. And if there's disruption, big losses to the stockholder. If it goes as planned, eventually this could really work for investors. This could be a big payoff. But I don't have fundamentals to work with and I don't know the science. So this one here would be a nice watch stock as well, but it would be a pass for me because I don't know if this is going to be great or not based on a scientific kind of perspective. So I appreciate the person who asked about this was Francisco. Appreciate you asking about these stocks. I wish they had some revenues and some better fundamental data that I could put into my process, but without it, I just can't do it. So, but I'll provide my comments. I think these are terrific watch stocks that maybe in the future they'll be worth something. I don't know if you have any charts on KLALA or if we should move on to the next stock.
We can take a quick look at the charts. It is on quite a run since April.
Yeah.
So I'm back I'm back 3 years now, and you can see how volatile it is. It ran from $3 a share up to $46 a share. Would have been a beautiful ride. It'd been like the Superman ride. And then once it bottomed out here in November of 2023, it traded sideways for 2024 and up until April of 2025. And currently, it is definitely getting a bid. It is overbought at the moment. PPO is positive, but we do have a negative crossover. And look at the accumulation. It has really shot up. Money flow really started positive back on the 4th of June. And then the cumulative money flow really started to gain some traction there. So that's looking pretty exciting. If I were trading this, and it is risky, it could fall from 20 to $1 in one day, depending on any kind of announcements. But if I were following this, as long as it's staying above a 21-day EMA, if I had entered into it, I'd hang on to it and then possibly get out as quickly as possible if it falls below that. So it's definitely a challenging one.
Interesting. All right. So let's move over to Fiserve. And that's a request from Peter, who's on the stream. Good to see you, Peter. And this stock has been under pressure in 2025. It hasn't had a very good year. And I would say that several payment processors, these guys are a payment and financial services company. So they're in the payments industry. They're like a fintech, and it's one of the established ones. PayPal hasn't done all that great. These guys aren't doing all that great. There is competition in this space, and the market just has not liked fintech for a while. In this case here, this stock sold off 26% for the 1 year, 36% for year to date. Market cap 71 billion, revenues 21 billion. The fundamentals look actually quite good. Current PE ratio 21.97, but it's dropping next year to 12. It's a strong buy, 63% discount. And just using my history with PayPal, PayPal is also really discounted. The market's not buying it. It's doing this similar sell-off with PayPal. Looking at their revenue growth, it looks quite good for a big business growing at 8%. That looks pretty good. And the profitable, they create really good profit, tremendous cash flow. The cash flows look fantastic. Gross margins look good. So this one looks really good. Let's take a look at their balance sheet. Maybe the balance sheet's where the problems are, because I'm not seeing any problems yet. It looks like they do carry some debt, roughly about 29 billion, and their debt to EBITDA is right there at the limit, 3. So the balance sheets, they get a C. Like if you're grading a class of students, they get a C grade, passing, but not by much. Kind of like a C with a note to the student that, hey, you ought to improve your performance there. You ought to improve your balance sheet is what I would tell Pfizer. So the fundamentals look good. What's the forecast? What are analysts saying? So there's 25 analysts covering this stock, and on average, they're saying it's 63% discounted. Everybody has a price target above its current stock price. Isn't that interesting? And next year, they're supposed to grow at 8%, 7%. These are good growth numbers. They're not going to, be fantastic, but they're good. And the profits are going to grow double digits. That looks really good. This is looking like a stock that's going to be discounted. I can work on the valuation. Can you take a look at the charts?
You bet. So they're definitely on a downtrend since the beginning of March. They took a little bit of a hit during the tariffs, but not much, probably because they're wouldn't be tariff impacted. So they were only down about 13%. But they're definitely, if you connected a trend line across here, they're definitely on a downtrend, trading quite below their 200-day moving average, which is declining. So they're 29 to 30% below that. Their 50-day is also declining, and their 20-day is declining. The RSI has been below the midpoint. Now I'm going to skip that. I'm going to come all the way back to about March. So really been below or just barely above the midpoint since March. So the relative strength is not very good at the moment. The PPO looks almost identical. So it spent most of its time below the midpoint in bearish territory. Accumulation hasn't changed much. Money flow is positive and negative. Looks like it's been pretty flat on average for the past year. And they've really underperformed the S&P, the technology group, their sector, and the sector is also underperformed. So from a technical point of view, they're definitely challenged. If I did want to draw a line across here, just to give us some idea, it would, really need to break above about 142 before it's out of this downtrend. So as long as it's floundering down here or continuing to go lower, that would not be good news. I'd like to see it break above that trend line that I put there, somewhere close to there.
Interesting. So, as expected, I think Pfizer is going to have a really strong valuation. It's going to be discounted. I'm actually in the middle of updating it. And, this space has not been well liked by the market. And these guys have a balance sheet that had a C score, right? So I'm going to move the discount rate to 9%. PayPal's at 8 because they have a better balance sheet. Equity value is 72. So I think my share count is off there. Let me correct that. Share count is 543.59. So on cash, it's actually priced fairly. On earnings per share, next year we're expecting $12.20. It's a slow grower. Man, 18, I guess, is good. And then growth rate is going to be better than that. So there's a discount on Fiserve, but I think the discount on PayPal is better. And they have a better balance sheet. They have more cash than debt. So I think PayPal is a better option than Pfizer. PayPal also has Venmo, which is a very modern business, and they also are already in stable coins. They saw that coming, and they're already in stable coins. So I like PayPal more. Pfizer is discounted to some extent, but for me, it would be a hard pass because I could just buy PayPal. I get a better discount. Now, PayPal and Pfizer have not performed over the year to date nor the 1 year. It's not, the market's just not buying payment processors. So that's my evaluation of Fiserve, Peter. I know you're a younger investor. I don't know if this is a stock that I would recommend to one of my kids. They're 21 and 25, and I would be like, yeah, rather you go find within financial services, go find the next, Robinhood. Go find a stock that's going to go 600% up in 18 months. This one here, I think, is going to be okay for an older investor, but not the younger investors. I think younger investors got to play to find 10 baggers. And this one here, I don't see how it's going to be a 10 bagger. It's just not liked by the market. Fundamentals are okay, but it's not going to set any records. It also, I think Fiserve has more of a legacy business around merchant solutions. And we'll see where that space goes. There's a lot of competition. So that is Fiserve. All right. I think the comments are coming in fast and furious. Ben 10, Sciences Complex, I agree. And so Paul, so hold on a second. So make sure I didn't miss anything. So we got Peter, and we got Paul asking about Harmony. So they had some recent filings. Okay. Yeah, I can do that. All right. So we're going to look at Harmony Biosciences up 1.44%. Year to date, not having a good year. 1 year, not having a good 1 year. Market cap 1.89 billion. Revenue 772. And I want to catch up with your comment, Paul, which is based on recent filings. Okay. Okay, so Biosciences. So they're developing a new drug. They're in phase 3, so they're close to going into the commercial stage of that drug. Okay. So that looks good. All right, let's take a look at their fundamentals and see what's been going on. And I will update my valuation on this. So Harmony Biosciences, they are a healthcare company. They are focused on neurological diseases. Their growth has been good historically. It's been slowing down. But look at that. The growth is still continuing. Looks good. So growth looks good. And they looks like they have drugs in the pipeline, which is good because that means that their growth is going to last. It's going to be years and years of growth for this company. Let's see if they're making money. So they have very good gross profit. Earnings per share is there. Free cash flow is there. Very good. These things look really, really good. 78% gross margins. Profit margin is 23%. These are terrific numbers. Really, really, really good numbers. So that looks good. What are the analysts saying? We got 9 analysts covering it. They're saying, hey, man, this is an opportunity. 68% discount is what they're thinking. And let's take a look at their forecast. They think the company is going to continue to grow. That looks really good. They're going to be well over $1 billion in about a year and a half, 2 years. And earnings per share is going to continue to expand quite fast. Look at that profitability. Their PE is going to drop if the stock price stays where it's at. So that looks terrific. I can update my valuation. You want to take a look at the charts on Harmony?
Sure.
Thank you.
They are pretty volatile. I'm looking at 5 years worth of data here. One of the first things I notice is they're trading almost the exact same price as they were 5 years ago in September and October of 2020. They have risen quite above that several times and dropped down below it many times. All this volatility would be fun to trade. Let's go just to look at 1 year. They are trading below a downward sloping 20-day. The 50-day looks to be decreasing as well as the 200-day, but it's pretty much flat. which would correspond to what I'm seeing in the price action over a 1 or 2 year period. The 5-day has turned over, so it looks like it's starting to increase, and they're up about 1.75% today. The RSI is negative, but improving, but still below the midpoint of 50. The PPO is negative. The difference between these two moving averages is contracting, which means we'll probably have a bullish crossover. It may happen in negative or bearish territory. Accumulation has been pretty strong, and it looks like it's picking back up after a bit of a sell-off here. They have underperformed the S&P 500 by 27.85% over the last year. Healthcare by 6.27%. The biotech industry by 7.57%. And that industry is underperforming the S&P 500 by 21.
Man, this stock is so discounted. I'm amazed that the market just isn't giving them a whole lot of attention. The valuation, I literally just clicked the last enter field, and it's 63% discounted. Analysts are thinking it's highly discounted. The growth of the business looks really good. They're profitable. They have far more cash on their balance sheet than they do debt. They're building more drugs in their pipeline, so the future looks really good. All things look really good for Harmony Biosciences. Why the market isn't buying it up, I don't know. But what's the stock doing today? The stock is up today. That's good because Harmony is highly discounted. I don't own Harmony. I think it looks terrific, but I think it looks like a really good opportunity because of its very strong business profits and so forth. So that's Harmony. And I updated the valuation on my sheet, and I know I'll update it to the community in about 2 weeks. If you need anything in advance, Paul, you know where to get a hold of me. Here's the valuation here. You can probably take a screenshot if you'd like. But thanks for asking, Paul. You're all over healthcare, and hopefully these things start going up. All right. So next comment is Chime is really up so far. Really? And I think we looked at Chime last week. Let me take a look at Chime. Wow. Why is Chime up so much? People like Chime. Let me take a look at the market. So what stocks are in the green today? So we got Apple up. They launched their new phone. And we've got a little rally here. This looks like the infrastructure around semiconductor. Uber's up nicely. IBM's up. It looks like semiconductor is up. AMD, Micron. Tesla's up. Walmart's up. A couple of healthcare stocks are catching a bid. Looks like Pfizer's having a good day. Guess that acquisition did make investors take a look at Pfizer. But there are some red stocks as well. It's not, I think the market overall is pretty flat. Look at that. The S&P is flat. NASDAQ is flat. All right. Well, it's a Monday morning. The market's a little groggy. Maybe it had too nice of a weekend and trying to get itself going. So Chime is up within the financial space. Credit services are up. Here's Visa, MasterCard. Interesting. Yeah. And Chime is a small cap in relation to like Visa. I mean, Visa's gigantic. So good to see that. And we analyzed Chime last week. Muhammad, good to see you. And I'll take a look at Peter. I'll take a look at XTB on my off time. And I did look at the company we talked about on the member call, and I provided it on the Discord. So take a look at that. And I think the ticker was QRS that I looked at. All right. So from here, are there any stocks that you had in mind to take a look at, Daryl?
I don't have any today.
Okay. Let's look at the market, and then we'll kind of wrap things up. So this week is not a lot of big news unless I'm missing something. We're going to see Costco announce their earnings on Thursday. And Daryl and I plan to do a watch party for Costco earnings on the afternoon of Thursday. So tune in if you'd like to see that. But the market, I mean, it'd just be a guess on my part, but I wouldn't be surprised if we sell off a little bit this week. It's just we've been on a really nice upward trend for a while, and some of these stocks are getting really priced quite a bit high. Let me change this to the year to date. This is what I mean. It's like, hey, this is great. Google's up, Meta's up, Broadcom's up. I mean, these are big, big valuations, right? Well, that's great. You know, my portfolio's doing great. Look at Palantir up 138%, CrowdStrike. AbbVie's up nicely. But there's got to be an upper limit, right? There's got to be to a point where at what point do investors start to take profits? So that's why I have that sentiment that, hey, I wouldn't be surprised if we sell off a little bit this week, maybe just start a nice correction over the next 6-8 weeks. But it's just a guess. Nobody knows when the market's going to trade up or down. We just know that, hey, at this moment, this is what's going on. Apple's catching a bid, Tesla's doing well, and a couple of others are doing well today on Monday. All right, so let's kind of wrap up the show. I just
tomorrow, Chief Powell is having a speech. Sometimes that can be market moving. I think that's around 12:30 or so Eastern time. And then on Friday, we have the PCE price index.
Okay.
So that's definitely, if that moves much in either direction, that could be a market moving event.
Yeah, thanks for that. Yeah, and I'm looking forward to hearing Costco. That's always, Costco, they're unique. They're really they follow the beat of their own drum. They don't do things that everybody else does. They do things that they believe is right for Costco. I think that's great. And investors really like Costco. I can tell why. I like shopping at Costco. And so that'll be interesting. And then next month, in about a month's time, we're going to get really busy again on earnings. But we'll have like one or two big earnings each week, and we'll see how the market trades on that information. Before we end the stream, I wanted to just make you guys aware. If you're a member, you know the perks that you get as a member. I've been creating a lot of videos that are only released to members, and through the history of my YouTube channel, it's been a lot of fun. I've learned a lot, because if you really want to get better at anything, try to teach it. And that's certainly been the experience I've had having a YouTube channel. But I've taken a lot of my research and really aimed it at the members. And I really appreciate people being willing to pay for a membership. And I want to make sure that you feel like, hey, I get far more value than this subscription each month. I've become a better investor. I've learned, and I've collaborated with other investors on the member calls, on Discord, and so forth. So take a look at, the member program that I have. If there's a right level for you, great. Be great to have you. I certainly enjoy the collaboration with investors that you've seen on the live stream. We're going back over a year now, and I think we're getting better and better, especially at finding small caps. So take a look. I think it'll be a place for you to learn, a place for you to get better, which in the long run will help you build your wealth. So consider it. And how about your channel, Daryl? Anything going on with your channel? Anything you want to share about your channel?
I did release a Costco earnings preview video yesterday. If anyone's interested in Costco, you might find that interesting.
Yeah, thanks for doing that in advance of the earnings. You've got that video, huh?
Yeah.
Perfect. Thanks for doing that. All right, everybody. Well, happy Monday. Let's see how the market trades. Our next stream with Daryl and I will be Wednesday morning, same time. And we'll go through the same process, same format. Thank you so much, Daryl. Appreciate you co-hosting the stream with me. And
Thank
I
you,
hope you have a
Victor.
good
It's
day.
good to be here.
All right, everybody. Have a great day. We'll see you soon.
Take care.